Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, January 17th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Real quickly, before we get to the charts here, I do want to remind you that Monday, January 20th, is a market holiday in the U.S. in observance of Martin Luther King Jr. Day. We will be back to our normal scheduled events on Tuesday, January 21st, with our next pre-market video and trading room sessions. All right, let's take a look here at the ES. In the daily time frame here, we've just seen overnight strength out of the ES that has taken price all the way back to the previous session's high. The previous session, the ES finished with a digestive day, a thrust reversal as well, thrust reversal back into the previous session's range, and then had a relatively narrow range throughout the session with a downward bias. That's exactly what we were looking for heading into that session, and it kind of played out exactly as we were thinking it would play out. Now, we are now at kind of a swing high within this kind of downward sloping channel at the moment, and one of the things I cautioned about this week was if we did make a move higher into the end of the week, is that going to feed into another rotation down heading into next week's trading? That's going to be something we need to keep an eye on. Now, from a two-day range perspective, this could be a great opportunity for bears to defend the top end of the previous session's range for a rotation back within the previous session's range, as this market perhaps develops a two-day trading range ahead of next week's holiday shortened week. Again, Monday the 20th here is a market holiday, and then we get back on a Tuesday. So instead of running off and breaking out and rallying or seeing tremendous selling pressure, this market could be range bound heading into the weekend. So one of the things we mentioned yesterday afternoon in our trading room was keep an eye on the extremes. If we come up here and test the previous session's high, that could provide an intraday opportunity for a return back to the previous midpoint and maybe back toward the previous low. If we did get back to the previous low, it's an opportunity to fade it back to the previous midpoint and perhaps back into the previous high as a two-day trading range develops. But keep an eye on the previous session's high. Any expansion beyond that level could certainly open up further strength towards 60.50 up above. But as of right now, keep an eye on that level for a short-term fade opportunity. Looking at the NQ here, the NQ right now trading 68% of ADR at the moment. The ES is at 59% of ADR. We're seeing strength in the NQ right now, seeing pre-market strength out of some of the tech leaders, including Apple, especially after Apple's significant sell-off in the previous session. But this is leading to a little bit of strength right now on a bounce-back play. Keep an eye on the previous session's high here, as that could provide a bit of a fade opportunity, maybe even as high as 21,600. 21,600 could give about a 200-point reversal back toward the previous session's midpoint of 21,400. Maybe down away and then back up again. Same type of framework as the ES for right now. Previous session, we did get ourselves a nice thrust reversal back toward the previous session's midpoint, and it was also kind of a digestive day as well. So again, right in line with expectations for today. We're looking for a two-day trading range to develop, and then we'll get back to work on Tuesday. Now, when we get back on Tuesday, we will have earnings that will be in focus. Netflix has earnings Tuesday the 21st, and that could get things started in a big way. But really, the last week of the month will have a ton of tech earnings, including Microsoft, Meta, Tesla, Apple, Google, Amazon, all within a 3-day span to end the month. That could provide some fireworks for these markets. All right, looking at crude oil here. Crude oil down 0.5% right now. The previous session, rollover gap down and a hard drop. You did see bulls defend the previous session's low here for a trap and reversal. And right now we're seeing an early pullback at the moment. One of the things we mentioned in our trading room here yesterday afternoon again is the fact that this market has not really seen two down days in a row during this upswing, which began December 20th here. That upswing right now has only seen 1-day pullbacks and then kind of a very strong continuation the very next day. So on this early morning weakness here, keep an eye on 77s here, maybe a bit lower, but 77s for signs of rejection. That could open up some strength here where we finish back through the pre-market highs and perhaps finish on an up note. And eventually this pullback here could be a buying opportunity on a swing basis toward the 81.50 level. Looking at gold futures. Gold has been showing strength here. The level we talked about the previous couple of few days has been the 27.40 level. That's the level where ideally we see transition for the next breakout move. And you can see right here, this market has been coiling in a big way, big time triangular pattern here, that triangular pattern. If you get the right upside break here, forecast a target to 3,000 and even beyond 3,000, depending on how you want to mark this expansion target. The idea was to get a push through this pivot high right there, which is 27.40. We're currently right at that level right now. Maybe this wasn't the biggest transition day, but it's building for a shot at expansion. Of course, you start to get through the 27.60 level up here, it really opens things up some more, but at the moment we've gone from kind of chop around the middle apex portion of the range to kind of a more bullish extreme at the moment, and we're also seeing price push beyond the previous month's midpoint. We're holding that midpoint and bouncing higher, and that should open the door to a test at the previous month's high. Fell just short of that level yesterday, but you start to push through that level, it opens up the upside. So this thing building some energy here for a forthcoming expansion phase, perhaps the beginning of which is starting now. All right, looking at the YM. The YM here showing some early strength in pre-market trading. Again, this one probably had the most compression the previous session of any of these markets. You can see the compression here was significant compared to average. Only 288 points of range and never took out the overnight high or the overnight low the rest of the session that during the RTH trade, and that happens just a fraction of the time on any given year. So to stay within the overnight high and low throughout the rest of the day and be a compression day, very, very rare compression event, and it's building energy. Now, to be above the previous 2-day highs here, you're going to want to watch that very closely, because any failure to hold that previous high starts to rotate you back to the previous midpoint, maybe across the range toward 43.2. That could be about a plus 400 points on the high end. And then from there, you probably bounce it back up and stay within a 2-day compression throughout much of the day. Now, no signs of rejection on the upper end of these ranges just yet. So you got to watch to see if a rejection begins to happen at the previous highs across the board, especially in the ES and the YM. Those are the two markets testing that extreme at the moment. Any acceptance beyond that level starts to open up further strength, perhaps back toward the 43,800 level up above. So it doesn't necessarily have to fade back down. That's just a thought heading into an extended holiday weekend. If we did start to push through these highs in a big way, more strength could be seen to the upside. But right now, any rejection opens the door back to the previous session's midpoint and intraday VWAP, which is currently 43,500 right now. Could be an intraday scalp opportunity. But based off the intraday directional conviction of the move, got to be mindful of watching for rejection in order to fade in front of that strength. Looking at Bitcoin, this one up right now 2.5% and trading 103,000. Big time move this week, and it all started with our wick reversal G-squat day right there. That day right there gave us a lot of confidence that we would have an upswing here at least to 100K, but perhaps even beyond it to the previous high here, and we're seeing a move materialize toward that high now. Now, are we able to see big time acceptance beyond 100K? Right now you're seeing Really nice strength here through 2-day highs. We're seeing this thing swing higher here. If you can start to push through this prior pivot high, you open up the potential to go grab a new all-time high beyond the 109,000 level. And does that trigger further strength ahead, or do we turn back down into a larger trading range? That's going to be something to keep an eye on. But right now, very bullish. And that day one rejection, as we saw much of last year, these types of rejections have really paved the way to quite a bit more strength up ahead, especially with a high confidence factor. Looking at ETH, this one right now up 2.4% right now. Nice bounce back day. At the moment, this is a double inside day. Double inside day where you have price the previous session was inside the range from the prior session before that, and then the current price today is inside yesterday's range here. Double inside day, that can be a big time compression type of pattern that leads to expansion down the road. Now the expansion can vary depending on the directional conviction preceding the pattern, but that's a buildup of energy here. Does it lead to more strength to the upside, or does that lead to a failure back within kind of the downtrending channel? Remains to be seen here, but at the moment we're seeing a rejection here at the previous key range low, and that initially led us to believe we'd get a quick test at 3,400 with a shot at 3,600 up ahead, 36 being the midpoint of that key range. So if you reject prices below the key range low, you tend to snap back to that midpoint. So we're still flowing toward that 3,600 level. If you can push through 3,600, it starts to open up the key range high, which would put you back toward the 3140s, rather 4130s. So we have a potential to get up toward that zone up ahead. Now, building energy here, again, could be kind of a range-bound finish to the week, but with an upward bias as of right now. All right, that'll do it for today. Have a great, fantastic extended holiday weekend. Happy Friday. Please be sure to like, share, and subscribe, and we'll see you in the trading room. Take care.